And Dariusz, if it's not, should we expect more stimulus measures? Do you think the authorities are willing to continue to step in to sustain these levels?
I think that we are only going to see some small adjustments to the fiscal stimulus, in particular trying to promote consumption, something that has been very successful recently, looking, for example, at the car sales growth, which was astounding. On the other hand, I think we are already witnessing a gradual withdrawal of monetary stimulus because the Central Bank of China is increasing interest rates at which it removes liquidity from the money market. And this is a very subtle movement, but still indicates that probably they are less concerned about growth outlook. And I think they may be the first major economy to hike rates, possibly already in Q4 this year.
In Q4 this year, to what extent do you think the market is starting to price that in, Dariusz?
Well, interest rates on Treasury yields, Chinese swap rates are already pricing in to some degree the fact that the government will hike rates. For example, the 3-year government bond yield rose by about 40 basis points in the course of July so far. So clearly, fixed income markets are anticipating that, but the equity market is more focused on growth and doesn't worry yet about any possible monetary tightening.
Dariusz, we just have a moment left before we have to let you go, but tell me, do you see much structural shift in the makeup of the Chinese economy as we go through these turbulent times globally?
There is some shift away from reliance on external balance and towards domestic demand, both in the consumption and fixed asset investment side, which is going to alleviate the pressure on China to allow its currency to appreciate. And therefore, we think that renminbi will end this year unchanged at 6.83 and maybe will rise at most 1% next year versus the US dollar to 7.67. To 6.76.
Dariusz, thanks for the clarification there. Dariusz Kowalczyk, Chief Investment Strategist at SJS Markets.